Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 24th of January. UK Supreme Court sent to announce its decision on Brexit. Today, the highlight for financial markets is likely to be the UK Supreme Court decision on whether Parliament should have a say in triggering the official process for the UK to leave the EU, the Article 50 of the Lisbon Treaty. At the referendum, the members of Parliament overwhelmingly supported the Stay campaign, and many of them still advocate that the government's top priority should be to safeguard UK jobs from being lost as a result of the divorce and to ensure a smooth transition for the UK economy. Having this in mind, we believe that lawmakers are in favour of a soft Brexit overall, where the UK retains its access to the single market. Therefore, in case the court rules that Parliament should be involved with the Brexit process, we could see another relief rally in sterling. Yesterday, cable traded north to hit resistance near the 125.40 hurdle. Following Theresa May's Brexit speech on the 17th of January, the pair emerged above the upper bound of the downside channel that had been containing the price action since mid-December and is now printing higher peaks and higher troughs above the short-term uptrend line drawn from the low of the 16th of January. A clear break above 125.40 in this scenario could open the way for our next resistance territory of 126.40. On the contrary, a decision that the government can act unilaterally is likely to cause the pound to erase some of the gains it posted in the aftermath of Theresa May's Brexit speech, as the scenario of a hard Brexit becomes increasingly more likely. GBP USD could correct lower and aim for the crossroad of the 124.30 support and the short-term uptrend line taken from the low of the 16th of January. If sellers prove strong enough to overcome that support zone, we may experience extensions towards the next support of 123.70. Moving to the US, President Trump formally removed the US from the Trans-Pacific Partnership trade agreement yesterday, in line with his pre-election promises to scrap or renegotiate disastrous trade deals that are hurting American workers, in his view. The next trade deal that President Trump is set to renegotiate is NAFTA. We think that this could spell further bad news for the Mexican peso, but not so much for the Canadian dollar. This may be the case because even if NAFTA is scrapped altogether, the US and Canada may still have a free trade agreement in place, the FTA. The US currency did not respond to the TPP news, perhaps because something like that was widely anticipated. However, before that, the new president reiterated some of his other campaign pledges, such as the fact that he will cut taxes massively for companies and the middle class, and that he will cut regulations by 75% or maybe more. Even though one would expect comments on looser fiscal policy and deregulation to support the greenback, the positive reaction in the currency remained very short-lived. Euro-dollar traded somewhat lower on these remarks, but hit support slightly below the 107.20 barrier, and then it rebounded to recover the losses and to trade even higher. The price structure on the 4-hour chart still suggests a short-term uptrend, but as we get closer to the 108 key obstacle, we would stay careful that sellers may be waiting to shoot near that critical zone. In our view, investors may be waiting for something more concrete than just rhetoric before they start betting on the Trump trade again. In this regard, the date when we are likely to get actual numbers with regards to the government's fiscal stimulus package is the 6th of February, the deadline of the new president to submit his preliminary budget proposal to the Congress. As for the rest of today's highlights, we get the preliminary manufacturing and services PMIs for January from several European countries and the Eurozone as a whole. The forecast is for the manufacturing index to have remained unchanged well above the 15 barrier, which separates expansion from contraction, while the services figure is forecast to have ticked up. We think that continuously elevated PMI prints would be encouraging news for the ECB and perhaps another indication that all of the bank's prior easing measures may have finally begun to filter into the real economy. Something like that could support the euro somewhat. From the US, we get the market manufacturing PMI for January, and expectations are for the index to have ticked up. We also get the nation's existing home sales for December. We have only one speaker scheduled for today, ECB Executive Board member Sabine Laudeschlager. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.